All right, controversial, but I think a paid off home is one of the worst investments you can actually have. Let me explain. It's quite controversial what I've just said, but I actually think it's true. If you think about it, a house that you invest in, say in Australia, you go out there and you purchase an investment property, you go on years and years after to then pay it off. You then have a house that probably grows between 6 and 8%, and then in terms of the actual rental yield you get is probably closer to about 3 or 4% depending on where you invested. The reason why I think it's one of the worst investments is you've got an asset there that you're now paid off, which is amazing, but you're earning about 3 or 4%. And when you're retiring, you want assets to produce income for you. So you're retiring on the income, not the capital growth anymore. So when you think about that compared to, say, shares and you're getting dividends, some of these companies could pay you dividends that are so much more. And I know some people will go, well, then you should get into commercial property. But even with commercial property, you're looking at what, maybe 5%? And yes, that is net, so you don't have to pay for the other costs like you would in residential property. But the whole point of buying real estate when it comes to growing wealth is you want to be doing it with debt, because that's how you can leverage up your returns. That's why when you've got properties and they're getting closer to maybe being paid off, you're better off using that equity to go and invest into other assets, be it shares, crypto, and whatnot. But the idea of paying off a house sounds good in theory, but if you want your money to work as hard as possible, if you just purely relied on logic and the numbers, it's not that great of an investment if it's a paid off house. Something to think about. I want to know what your thoughts are.